All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open for almost an hour here, and the S&P was up 3 points. We're looking at about a 3 point rally here this morning. Just not much. Banks flat, dollar flat, gold flat, oil, just flat, and very little volume out there in the market here today. In fact, let's see if I can put this on a 5 minute, and you can just kind of see. Let me expand it so you can see a little bit better. But here we are with the volume so far this morning. And it's significantly lower than yesterday, much lower than Wednesday, lower than Tuesday. And let's face it, Monday, Tuesday, they were pretty low volume days. And so far, this morning's open is lower volume, which tells you what? It tells you nothing's changing, right? Low volume is indicative of nothing changing. High volume is indicative of something changing. And so from a market standpoint, there's just very little changing, right? Now, from an individual stock differentiation standpoint, we have some change kind of going on out there. The industrials here this morning definitely taking the lead and, pushing on higher. In fact, if we look at the industrial sector, it's up 1%, right? Consumer names kind of leading the way here. But it's being offset by some heavy selling in healthcare, heavy selling in utilities, and so it's the same market that we have seen, this rotational element, and we have seen it here in the past week where utilities have been bought on up and industrial sold. Today it's kind of that opposite action. Taking place here in the market right now. So, that's what we're seeing. And we're not seeing any new signals on the board, but by the close here today, we could. Things like Boeing have a nice little 3-7 crossover going on them. FedEx, which yesterday missed it by 2 pennies. And the signal is on when it comes to FedEx right here. But it will be an afternoon decision simply based on the amount of movement in the stock that it has had to create the signal. So that's something that we'll have to take a look at. I'm going to come back to FedEx and speak to that just a little bit more. But we have stocks like Triple M with an upside 3-7 crossover on them. CSX with an upside 3-7 crossover on it. Caterpillar upside 3-7 crossover action here in Caterpillar. And most of these, Triple M no, but most of these CSX Cat could easily be bullish triggers here by the end of the day with that 3-7 crossover. And we'll be looking at that here in the afternoon session. Now on the board right now we have 2 positions. We have Intel and we have Chevron. So let's go take a look at these. Intel option is 312. And Chevron option is 310. All right, so 312 and 310. There we go. Excuse me. All right, so that puts the challenge back up over 11,000 in gains. We've been here, we've been kind of, just kind of stuck in this area, kind of between, 10.5 and 11.5 in gains, and just kind of bouncing in this area all week. Nice move here on Intel, but we are short of the price target, so there's nothing to adjust there. And Chevron, which was down almost 80 cents yesterday morning, rallied on back to end the day kind of flat yesterday. Pushing just slightly higher here today. When stocks don't move very much, we essentially deal with the time decay, which, if you're trying to calculate how much time decay there is, on a position or something, most brokers will give you a theta number. But for the most part, okay, just an average estimate there, it's about $10 per day per thousand. So what do I mean? Well, if we have $10,000 in play, we can expect a theta or time decay of about $100, right? That's how much we're just gonna have to pay to hold the trades another day. right? And so, right now we have 6,000 in play. Theta is time decay there is about $60, there. And, that there's no way to get around it. If we were to do shorter term options, the number would change. If we did longer term options, that number would change. And it's not a number that, influences trade decisions or trades in any way, shape, or form. But, it is a reality when we start to see things just kind of slog around. It becomes a lot more apparent that is what we're seeing, and that is what is going on, at least for that moment, at least for that day. And as we know, when it comes to options, the delta almost always matters more than the time decay. When you're looking at long options, when you're looking at trends, when you're looking to play stronger types of moves there. Okay. All right. So that's where we are here with the challenge. Not making any trades here, but as no signals are on the board, but we could see some of those come into the industrials here by the close of the day. Now, yesterday, had a really good question come in, and I want to address it because I think it's something that is very applicable to the challenge, not only right now, but very applicable to the challenge in the future as we go forward. And every 3 months, we get corporate earnings, where companies come out, they report what their earnings were for the past quarter. Many companies give projections for what's going to happen going forward, but not all. When we have earnings, analysts will come in and upgrade and downgrade and do all that kind of stuff. And when it just comes down to earnings, there's a big random factor here to it, right? There are a lot of theories when it comes to earnings. A lot of people that have a lot of, if the stock goes up ahead of the earnings, well, the earnings are going to be great. If it goes down after it's a lot of theories that just don't hold water. That just do not get past the theory idea. But when it comes to the challenge, earnings have an effect, right? Now, the biggest and the easiest effect to see is that, hey, when a stock triggers and earnings are going to happen, and we don't have more than 10,000 in gains in the challenge, I'm not going to play it. Right? I'm not going to play the trade. I'm not going to go after it. And we've had several of those here on the triggers. With the challenge, it's not something where not something we haven't seen here yet, but it hasn't happened very often. But with currently right now with more than 10,000 in gains, that's not an issue, right? I'm willing to hold a trade over earnings as long as it fits all the other parameters and it hasn't hit its time stop, hasn't hit its price stop, and all of that. Right, so that's the biggest effect earnings are going to have. Just in terms of when holding a trade or not holding a trade, or even getting into a trade or not getting into a trade. But one of the other effects that we are seeing right now, and that we will see in the future, is that because of the options that the challenge is running with and choosing, the delta on the positions will not be as high when it comes to a stock that has earnings during the life cycle of that option. For example, Intel. Right? Intel right now, we're in the August 47 calls. Right? Well, Intel's earnings, let's go pull it up. We'll get the exact date here. But they are in that time period, right? Earnings for Intel will happen on the 25th of July. So since we have the 16th of August calls, right, we have the right to hold Intel over earnings. Now, what does that mean? Well, from an option pricing standpoint, because the market knows earnings are going to create a stronger move, a stronger price move, the options tend to be more expensive. They tend to be inflated. In option terms, it's known as there's more implied volatility in the options. What happens is after the earnings, that implied volatility comes out. right? And sometimes the stock moves enough to counteract that. Sometimes it doesn't move enough to counteract that. But the bottom line is the options are simply more expensive, okay? Now, holding something like Intel before earnings and, with just like we are right now, right, we're not going to see that implied volatility go down. We're not going to see the options get crushed because of that implied volatility. That implied volatility, it's going to tick a little bit, but it's not going to move in a big way, right? And if we come in here to Thinkorswim, if we look at this Vega, right, the Vega on Intel, on our Intel position is $67. That means for every implied volatility point that Intel moves, it's going to affect our position by $67, right? And, you can see the implied volatility is about 27%, okay? If you go into next week's options, the July's, the implied volatility is just about 20%, right? So there's an elevated implied volatility here, okay? So it means we're going to pay up a little bit more for our options, but where it matters for the challenge is here. Matters on the delta side. And not so much that the delta is different, but the delta relative to the price of the option is different. So the delta, the amount that the option is going to move on a percentage basis is simply going to be less. Now, that works and comes in our favor if the trade goes against us, right? So if Intel were to go against us and move to our time stop, right, move a dollar against us, well, that delta wasn't a huge percentage of the option, so, we're going to survive and be able to move on and be just fine. But it also takes away some of the reward potential, right, where, we're up about 30% on the position right now, and the stock is moved just over an average true range in our favor. When earnings are priced into an option, the total risk on the option in terms of just what the option will be if it hits its stop targets will be less. The reward potential will also be less. The reward potential won't be as explosive. Now, this is one of the reasons why, I look so much at options and what options to choose for the challenge, simply because, hey, you know what? I want the reward potential. I want the explosiveness. Bank of America, right? Options were priced in. Yeah, we made money on it. We made 50% on our money, 60% on our money. But, hey, come on, for that move, yeah, it would have been nice to have some more. So we're not affecting the risk reward because the risk is also less. It's mitigated. It's going to be a little dampened relative to a different option. But it does dampen the reward potential as well. So having $6,000 into play is more like having $4,000 into play when earnings aren't in play, right? Having $10,000 in play is more like having, $7,000 in play when earnings aren't priced in. When putting the challenge together and looking at all the data and looking at everything, that was there, we decided that we weren't going to make decisions based on those options. Meaning, if a company reports earnings and it triggers, we're going to go after it. Yes, we know the option reward potential is going to be a little less, and we know the risk is going to be a little less, and we're probably not going to have the explosive monster gain. Right? Meaning, Bank of America, it's not going to be game-changing to the challenge. It's not going to, we're not going to get a triple or quadruple on our option. I said, that's fine. But we know this period ahead of earnings is going to be a period where the amount of movement on our options could be significantly muted. After that, after earnings, it goes back to normal. And we looked at, hey, do we do shorter-term options to get earnings out of it? But then we get into some of the, the viability, sustainability elements. And ultimately, we looked and we said, hey, you know what? We could still get that. We don't take away that 100K target. We don't take away that 100K reward potential by just managing and running with things as they are and understanding that earnings are priced in and understanding for what it is. Not for, well, is it good or bad or should we do something? No, is what it is, and when that happens, we'll deal with it, right? Under Armour, earnings weren't priced into the options. The option were a little bit more explosive. In fact, today, Under Armour up big. The options are moving very nicely, and so it's moving on kind of a more normal, more traditional type of factor. But CSX, American Airlines, Bank of America, Chevron, Intel, these have all had earnings priced into them, over the course of the lifetime of the option that we entered. Right. Let's go take a look at FedEx, and this is one that up big here today, but $5, right? $5 on a move here on FedEx. The movement in the option. It's getting more movement on the option than what an Intel is going to get, for that kind of similar average true range type of move. Why? Well, because earnings aren't priced into FedEx, earnings are priced into Intel, and so we're going to see that. And some trades are going to have it, some trades aren't. It doesn't mean one trade's better than another or one trade's worse than another. It's not a judgment type thing, where good or bad or choosing the right option or anything like that. We could go and choose a different option that doesn't have earnings priced in. And yes, when the trade goes in our way and the trade goes big in our way, we will be much better off with the shorter term option. But at the same time, with the shorter term option, trade goes against us. The risk on that is almost 100%. No, it's almost 100% because, by the time it hits the stop price and the next video session comes on, some of those options can be down 80 to 90%. And then is it even worth pulling it off, or do you wait for a possible rebound? And there's nothing worse than pulling off a trade at a 90% loss only to see it go your way. But, when you hold something with a 90% loss, it normally goes to zero. And, we wanted to have as little of that in the challenge as possible. While my personal trading, I have no problem with things going to zero. I trade little lotto type things all the time that go to zero. I am more than okay with it because I know the reward potential. It's not something that, we wanted to be a consistent factor into the challenge, and we were able to mitigate it, able to take some of that out. We're not able to take that out 100%, but able to take some of that out here with the options selection and just the way the average true range affects things out there. Okay. So that's where things, sit, and that's kind of where this earnings element is. And as we go through earnings are going to start here middle of this month. And we'll start with the banks. We'll see all those later in the month. We'll get into some of the Chevrons and whatnot of the world. But as stocks on the watch list report earnings, we're going to see the prices of the stock move, here and there. But signals that come in after that, they tend to be pretty strong, and the options tend to be really good. So, it's one of those where I always look forward to, to that kind of time period. Thanks for hopping on. Have yourselves a fantastic day. I will not be on video here this afternoon. I will be around, and any trades that get made will be sent out real time, and the spreadsheet will be updated at the normal 2:30 time period. And any trades, any adjustments will be sent out. At that time. Again, thanks for hopping on. Have yourselves a fantastic weekend, and we will talk to you on Monday. Take care.